The pin bar setup has changed. Stick around and let me tell you why. Hey traders, warm welcome to you. Thank you for joining me. All right, so pin bar, I think we're all familiar with the pin bar, right? The pin bar is this basically. It means, hey, we've had a lot of trade that's gone down in one direction, but it was short-lived, normally on a daily chart. So the day has done some work to the downside, but it's open and closed to the upside, and it's normally through a resistance or key level. Okay, very often the classical trade was this. Okay, market was pushing up, it would consolidate. You would see this classical pin bar through the key level, which was where you kind of had to see it to have the perfect scenario, and that would be the supply demand imbalance to shift, look down there, wouldn't break out, no sellers, and then bars would step back in and boom, you'd be rocketing straight back off, and very often it would break the top of that type of scenario. So that's just one of the situations it could be in, and often the trade was to buy here for a continuation to the upside, and the stop would be under the low. And I talked about that many times, guys, in the videos. I shared it with you, and it's a good strategy, right? It's a good strategy, waiting for that test, waiting for this, and under the right conditions, it's great. However, I've seen over the years a slight change and twist to the way this is now operating. Why? I don't know. Market's evolving, algorithms, everyone jumping on the same type of thing. I don't know. But, and this has been confirmed as well by Peter Daniel. Did an interview with him. He focuses on Forex much more than me. He was saying, hey, I'm seeing this a lot. And we were talking about this in one of the calls. And this is happening across all instruments. So that first test, fine, under certain conditions you are still getting it, but what's happening a lot now is this second test. So the same thing is occurring, we're up to that, and then the pin bar is coming through. Let me see if I can get that color out. There's still some life in this, yeah, just about. You're getting the same kind of structure, right? The breakthrough, consolidation, the pin bar, and then very often what happens is it starts to go, i.e. this one here, this bar, and then it comes back and it tests again that low, and it takes out that low. And of course, everyone who's trading it in this way is getting stopped out, stopping people out, and then it's going. And this is something I've noticed is happening much more frequently than before. That was always there and it always could happen, but this seems to be much more of a frequent occurrence. You would have that second test and then it would go. So everyone who took that first test was getting pinged out, and then it would finally go. So watch out for that. But what's the solution? Well, the solution is twofold. You either say to yourself, okay, I'm going to wait for this and trade this on its own. Now, the problem is you end up missing out some of the great trades, because this is, in the right conditions, is a really powerful setup. Because one, and if this is a really strong trend and maybe there's a catalyst and all this type of stuff, one little retracement and then boom, whips off. It's almost like a catapult pulling things back, bang, releases it and just shoots it into the upside. You can miss out on that. So one thing you can do is that. Just wait for that kind of pull back, pull back again, and then take it on there, and then your stop goes under this level here. And what you can do with this is imagine that was the first pin bar, and then something else happens here, wherever it is, and the second pin bar comes down here. You can take it then as it comes back through there. So it's not bad in terms of the way you can increase and improve the risk reward structure of the deal you're taking, the trade you're taking, right? Because as it comes around through here, like, oh, I'm leaving it because it'd be a fake out, it could be a fake pin bar, and I can go lower and lower. But as then it comes back up, you could be extra aggressive on the deal and start taking it here, putting your stop here. All of a sudden, wow, that's a very, very different risk reward ratio trade, right? So actually it's a blessing in disguise sometimes, because before you have to wait for the pin bar to come back up here, and your stop will be structured here. That will be one, and then you kind of, if you've got a breakout here, then maybe that will be 3 to 1, right? You have 3 blocks, whatever that one block was, 50 pips, whatever points, whatever you're looking at. Whereas here now, you can be a little bit more aggressive and go, okay, well that's now my one. I'm getting 3 to 1, just back to where we were before. And then if I add the breakout that I'm anticipating as well, I'm talking about 10 to 1 trades. So yeah, the chances start to diminish more and more as we go through this, thinking about if then, but that can be quite a nice thing to do. But so that's one option. Second option is to widen your stop a little bit and or give it 2 or 3 options, I guess, here, to add to the trade. So something that I kind of trying to position a little bit for, think about a little bit more is, okay, I like the pin bar, I like the structure of that, technically it's right, I got the catalyst, all the filter criteria are being passed, great. If it comes down and tests, I'm not going to have a stop just there. I'm going to have some more firepower to potentially add a small clip to the trade in this manner. So treat it as a separate trade. It's a higher risk trade, yes, but if we get this, I've got a little bit of ammunition left to take that trade, structure it in that way, and then come out if we break through the whole low here. And that can then give you a little bit more flexibility. Or you say, okay, I'm going to widen the stop and maybe I'm going to only close on the close of a low. Or if we stay under there for more than an hour, you go, so you kind of, okay, you're giving up a little bit of control of risk here. I get that. It's not a perfect solution. And you could end up going way low and you get corner breakout and giving back much more than you wanted to. But that's one way of kind of combating it, is preempt it and say, hey, I'm going to accept the fact they could do that. If it does it and comes back up, I might get more aggressive, or I might just wait and see a little bit longer. I might not have a hard stop in, I might have a hard emergency stop in, you know, say down here, for example. But I might say, hey, if it closes down below that, I'll take the trade off or something. So you can kind of be a little bit more adaptive and dynamic with the way you trade it. So up to you, obviously. I mean, you know, your trading business, you're in charge of operations for your own business, but there's some ideas on how to maybe adjust to that. But one thing I've noticed is this pin bar change. You know, this still occurs, but I think more frequently now, I think that's still the main thing that's happening, and that's still a good, valid setup and strategy to look at. And as you know, guys, with this type of trade, it's what happened on the left-hand side that really makes or breaks this trade, not this particular. This is a sort of trigger. It's the filter that really counts. But sometimes now, and more often than we have been getting before, we get this second test. And so think about that. Go back and look at the chart that you trade, or the instrument that you trade, and just see how many times you get that second test and see if it's affected you negatively in any way. If it has, maybe there's an extra little tweak. You can just stay ahead of the game, make a little minor adjustment that just elongates the stop. It gives you a chance to add more size, waits for the second test under certain conditions. Maybe you can make these minor changes to your plan and strategy to accommodate, this could be temporary as well, but let's assume it's not, to accommodate this change in pin bar setup. And that way you're making money from the people who are still thinking old school, who are still positioning, going, it's never going to retest that. And then when it gets stopped, they're going, oh, yeah, but it's, you know, textbooks say this, yeah, but that was working very well before, but now it's not. That's the dynamic nature of the market. And so, you know, you're kind of taking the side of those people's trades. Ultimately, they're selling into that. And if you're buying into that and doing this type of thing, is it going to work all the time? No, obviously not. It's guaranteed no. We don't know it. But sometimes if you're one step ahead of everyone else and you're saying the conditions have changed, I'm aware of that, I'm structuring myself a little bit differently, I'm making a few minor tweaks to my operational side of things and my execution side of things to accommodate this change in scenario and regime, or whatever it's caused by, whether it's caused by algorithms or whether it's caused by people getting caught in that and algorithms kind of finding liquidity and knowing there's liquidity there, or I don't know what it is, who knows. And again, it could be temporary. Right? This could be temporary. It could be a situation where it's just the regime we're in. Maybe there's liquidity vacuums being left there as the market goes there and it's not taking much. Then actually, if you analyze the bar there, if you looked at the footprint or the delta there and you went, well, it's not footprint, it's not a delta. You looked at the footprint there, you might say, well, you know, really it's a very small amount of contracts in relation to the rest of stuff. It's just, this is liquidity vacuum there. There's not many bids left there. And very often we're kind of running down quite quickly in the day. And it's just going through that low and it's kind of stop hunting a little bit of liquidity vacuum, bit of stop hunting, runs against a brick wall because actually there's a real demand a little bit lower. Doesn't really go any further, starts to creep back up. Those then start to step back up and push it to high. I don't know what the intricacies are. I'm kind of making things, I'm thinking in my mind about, you know, how that might look on the order book and why we're getting this more predominantly than we had before. But we just are, just the way it is. It's just, you know, something to look out for. And maybe it's not in every market, but like I say, Peter's saying he's spotted a lot in Forex and he's very into a lot of different pairs and very, very focused on that market. I've seen it a lot in some of the US indices. I've seen it a lot in some of the US stocks as well, some of the bigger high cap stocks doing this type of thing. It could be the right one because a lot of those are kind of moving to the downside and consolidating at lows as I speak, but that's worth looking out for. And obviously flip it on its head if you're trading from the short side too. So if you're trading from the short side, you've got the same type of thing. And I guess one thing extra to add to this, not to make this video too long, guys, is if you are trading counter trend, and this is kind of a quicker scalp type trade, that's more likely to happen. If you've got a big rush up here and you're trading with the trend and everything's fine, then less likely to be a test. But let's say you kind of is a bit more two-way trade, a bit more dynamic, maybe you're going against the trend a little bit, then you might get an extra test on that. You might be like, okay, it's not very strong and very urgent, and it's likely to be two-way trade before it resolves. So it's possible to go to the downside, take out some stops with the first pin bar, look like it's running up, go down again, take those people out, then go up. It's almost like get one load, get another load, and then go. And kind of the fuel gets built up by taking out those stops. Anyway, something to look out for. Let me know in the comment section below if you've seen this. Just me have seen this, just me and Peter have seen this, but I'm sure you've seen it too. I'm sure you spotted it and gone, you know what? I think I've seen it now. Maybe this is kind of going, yeah, actually, I've been getting pinged out on some of these trades, and that might be why. So I hope it's helped, guys. Hope it's helped you hope it helps make you some better trades moving forward. Take care. See you next one. Keep your risk managed. Bye-bye.